Well, hello and good morning, and welcome to, I guess I'll call it our final Simply Tax Talks for November. It's hard to believe that we're already talking about heading into the last month of the year. I know it's cliche as anything to say it, but I mean, just the fact that it was Thanksgiving last week, and I don't know, it's starting to maybe resonate a little bit, but it definitely highlights the fact that time is running a little bit short here on some of the conversations that are going on in Washington. So we're going to revisit those, talk a little bit more about those today with Yelena and Tad. But before we get to the conversation today, let's deal with our favorite question, our polling question right out of the gate here. I always like to kind of ask this question because I think it's helpful to see what you're thinking, and that's around whether or not you think we're going to see significant tax change this year. I mean, there's no right or wrong answer, clearly, because we're all in this together trying to figure it out. As I've frequently said, my crystal ball is as good as yours. Or actually, as I corrected myself in our most recent episode of the podcast with Ed Carl, that I think Ed Carl now is the Vice President of Taxation at the AICPA. And I think your crystal ball is probably a little better than mine. But take a look at the crystal ball. Let us know what you think in terms of things. And while you're getting your answers in there, Yelena and Tad, I'll invite you to kind of join up here on the screen and maybe just out of the gate, what you're watching for and what your top thing you're watching for is. Yelena, how about you?
Yeah, well, this week the Senate is back from their holiday recess, so I'm looking to see what comes out of the Senate, what they're negotiating, what they're prioritizing. They have a lot on their plate this week and in December in general, and we'll cover some of what's coming up, the deadlines coming up and all that in today's session, but that's kind of what's on my mind is, what are they going to focus on and prioritize in the few days they have left to work in December?
Yeah, no, I'm right there with you. I think all eyes are on the Senate here as they get back into session here. So, Tad, what's top of your mind here before we start digging into some of our topics?
Well, what I've learned through this process is I just look for emails from Yelena. She's all over this stuff back there. So, and I see one coming from her that says like on the Hill or something like that. I pay particular attention to it. But yeah. I think the thing that I think is the new variable that's come into play is the Omicron. What I'm watching for here or seeing there's any comments coming out where people might be, or legislators might be more, conservative about, spending some money right now. If they think they may have to, adopt some other programs down the road, some economic stimulus because of, what may or may not come from this. But we're way too early to tell. But I think that's throwing a bit of another variable into what may happen or may not happen between now and the end of the year.
Yeah, no, that's a great point, Tad. And just you talk about all the uncertainty, and it's just this pandemic's just been kind of left, right, up and down. It's a roller coaster, right? And so that just introduces another level of variant here, literally. But looking at our poll, it's not close so far, but it definitely looks like we're leaning towards everyone thinks that we're going to see significant change enacted here. So maybe before we get to that topic, and Yelena, like you said, Tad, I do the same thing. I look out for those emails from Yelena on updates because kind of keeping an eye on things. But why don't we take a little bit of a deeper dive into a topic we got into last week with the Paycheck Protection Program. So let's jump on over to Tad's takes. All right, Tad. So again, like to get your take on things. We were chatting about the trio, I guess I'll call it, of guidance that we got here recently on PPP loan forgiveness. Some of them pretty technical in nature on the tax side, but overall a good action point that we had there about a need to take a look at maybe the need to amend or do a AAR for a partnership before the end of the year if you're implementing that guidance. But the question I really wanted to get to last week, but we didn't quite get there because we had so many other things to talk through, was what else are we seeing? What else should we be thinking about when it comes to PPP? So I guess that's my question to you, Tad. What are the other considerations? What are you thinking about and hearing these days?
A couple things that keep coming up, and I'm not sure what actually spurred this on. It may have been actually the fact that the retention credit got repealed. That it looks like a lot more people are focusing on whether or not they actually did qualify for the retention credits. Which you can still go back and file amended 941s and claim those credits back, to 2020 and the first 3 quarters of of 2021, but it seems like we can get a lot more questions about, did we qualify? Do we not qualify? What are the requirements? But what that leads to then is the question of, did you get PPP loan? Did you get a PPP2 loan? Because if you recall that you can't double dip on the wages. So if you got a PPP2 loan and you filed for forgiveness on that one and you use, your payroll, that payroll cannot be the same payroll that you use for retention credit. So, I mean, there's a way to maximize them. In general, you can maximize both of them, but we've been getting a lot more questions, regarding, okay, how do I, look, I got the PPP loan, but I think I might qualify for retention credit. How do I do the analysis? And, we've done quite a few of those for clients, and actually you can actually make it work. And it's a lot simpler than you think, because remember that the the PPP loan, you've actually got 24 weeks to spend that money. And given how you might lop over to 2 or 3 or whatever number of quarters in that 24-week time period, you can end up spreading that thing out enough where you can get both the retention credit and otherwise. But you really do have to look at it. Even becomes more important because there are any number of other programs out there, that may not be quite as, popular, or it may not be as well known as the retention credit. And the other one, for example, is what's called CERT, CERTS. It's a coronavirus economic relief for transportation services. It's basically for the kind of the ground transportation, the motor coach type business, the charter type business. Those people were left out, in some of the first round stuff with the CARES Act and those type of things. They were really and they were left out in the transportation that the airlines got. They had a really good lobby, and they got a nice grant program specific for those. But again, it's tied back to payroll. Now they have a lot longer time period to spend that money, but again, it's something you have to look at, because you can't do the double dip in here. So we're fielding a lot of questions from that side of it.
Yeah. There's definitely, I'll echo that. I've been hearing that as well. And, just the awareness of it, maybe with ERC back in the headlines again. But I know there's definitely been some conversation that look like right now we've got our poll going. It's, obviously kind of midstream here on our poll so far, but some of the, I guess, considerations of reporting it on tax returns and maybe distributions and the like. Anything on that front that you would maybe add or highlight?
Yeah, I mean, again, we talked about last week, and just to kind of remind what the main gist of the three documents that the IRS released last week was that they gave you great flexibility about when to report the forgiveness, the forgiveness income. Remember, it's not taxable, but we did get the ability to step up our basis, in our stock with an S corp or our partnership basis, which could allow you to deduct losses that otherwise you may not have been able to deduct. We call it better lucky than good, or just having great foresight on the part of some of our people, one or the other, that most of our forgiveness, we recognized back in 2020, which actually, these announcements that came out last week allow you to do. So we don't have a lot of amendments to do. We have, a couple that we are looking at, to see. We weren't really certain about the forgiveness, so we weren't comfortable with recognizing it in 2020. So, but now we have kind of a green light to go ahead and do that. So we are looking at a few of those. Definitely, we're going to be, looking at 2021 for the ones that maybe it didn't matter in 2020, but it does in 21. So a couple things. One more thing that got thrown into the year-end, sausage making and doing the planning that we have to go through, and just another variable. So we keep piling these, variables on top of each other, and it does make the year-end planning a little tricky, but all the more reason that you need to do it.
Yeah, I'll echo that, Tad. Year-end planning is important in a year, but this year in particular, with so many things changing here. One other question that I frequently get and hear, because I know it's of top concern often to those that have the loans, is maybe just around forgiveness. Obviously, now we've got the PPP 1 and 2s going through. Any trends you're seeing, or words of wisdom, I guess, at this point in time for those that maybe are still navigating that forgiveness process with the SBA?
Yeah, I mean, we have some that we have that are still going through it right now. What we're finding now is, it's kind of either the ones who procrastinated, didn't have the time, they were too busy with other stuff, and they want to get it off their books by the end of the year. But the other subset that we have are ones that, for whatever reason, we're running into some issues, primarily with the lenders. This is definitely a lender by lender category of the difficulty that we have. I've got some out there that have loans with mostly smaller regional type banks that have just been going through very smoothly, no issues whatsoever. But where we generally run into or have been seeing issues is with the larger banks. And it's not an SBA issue. I mean, it really comes down to a lender. I've got, a number of them right now that the lender is actually going back to the original application, for the PPP loan, back in, April, May of 2020, and going back there and in essence doing an audit on the amount that they should have, received as a loan, which, look, if they were going to do that, they should have done it back there at the time of the application, for God's sake. And given the fact that every CARES Act, AA or APRA or CAA, every one of those, kind of went further to, give relief to the lenders that, they have no responsibility or no liability other than to shuffle some papers. But it seems like, once a lender, always a lender. And so they're going back and digging in hard on some of this stuff. And, I'll give you an example, of one of them that I had there is that, one of the things that you could use for non-payroll costs was if you had perishables that you could use, the cost for a perishable, item like a food. If you're a restaurant, you could use, food costs, as one of your non-payroll costs. We submitted, a billing from one of our purveyors, and I mean, it just so happened there was some non-food items on there. We actually got an email back from the lender saying, on this particular invoice, okay, you included some like cleaning supplies of $37 and some odd cents. That's not an eligible cost. For God's sake, this was like an $8 million loan, and these people are going through this kind of detail. Yeah, I get it. Maybe it wasn't an eligible cost, but for God's sake, let's have a little bit of common sense and reasonableness here. Sorry, I got on my soapbox.
Hey, no, it's a good soapbox to be on, because it's a challenge for sure, and even stories of kind of hearing people going through sort of the checklists of what the things they need to get, and just not even connecting dots as to what they're asking for and how it works. Which again, I don't say that in any pejorative sort of way. I mean, it's just a fact, right? I mean,
and I would also say too is that there still is. And again, not to continue to pick on the large lenders, is that you can't talk to the people, who are making these decisions. They're in an office somewhere buried, and they got this moat around them that you can't talk to these people. You just have to go with what they say. I mean, we're getting, and I think you mentioned too that one of your clients get letters back from the IRS saying, hey, look, you didn't submit these particular items when you did. And what the lender tells us, well, just send us a letter if you already submitted them. It's like, for God's sake, people just, everybody's getting a little bit of PPP fatigue here, and I will tell you that there are tempers getting somewhat short. So,
sure, yeah, and understandably so, right? But well, maybe we'll get your take here real quick before we get over to the BBB on the ERC, since we're throwing around acronyms here. And obviously, we've been talking about it pretty heavily here since the early sunset, I guess, if we want to call it, of the ERC came into being with the infrastructure bill being signed into law a couple weeks ago here. Any word from the IRS on what we're going to do here in terms of the guidance on navigating this kind of early and retroactive, I should also point out, sunset?
Yeah, they came out with just, as they are wont to do at times, just tremendously helpful guidance. Basically, their guidance was in the form of, they updated some instructions to, the Form 7200. And basically they said, just continue to monitor the IRS website for guidance. Like, come on, we don't need to see that. We just need to have, have some guidance out there. They did give some instruction about if you had filed a 7200, remember that's a form to get an advance payment on your retention credit. So if you filed any 7200 for the fourth quarter, and you have not gotten the refund already, the IRS said that they will generally pick that up, and they will send you a letter that says, look, we can't process this. You won't be getting a refund because the law changed, and you're not eligible for the retention credit in the fourth quarter. If you already have received a refund off of a 7,200 for the fourth quarter, they're going to continue to have the line on the 941. So when you file your 941 for the fourth quarter, you're going to put that on there that you actually received the refund. And it's going to end up being, they're going to, make another adjustment on there that you will actually owe that money back. So, just because they haven't sent you a bill, or sent you a notice of, look, you owe us this money back on the 7,200, you will have to pay it back, and it will be part of your 941 payment. Now, again, we've got nothing about whether they're going to waive any penalties or waive any interest. They dang sure better, do that given, when this law passed. I did see something, and Elena, you may have saw that too today. I saw something in the reading this morning that one of the lawmakers was pressing them, to get something out now to waive any interest, or at least give them some guidance now about when that's going to be coming out. So I think there's a groundswell. I think it was another consulting firm or something, had put that out. So anyway, people recognize we got the issue, but what they gave us guidance on, is like, yeah, we know, continue to monitor the website. Like, thanks for that. You could save the paper, but again, at least they recognize there's an issue.
Yeah, absolutely. And hopefully we'll get some guidance here soon, because I know that's been a point of consternation for many. But and I just want to address a point too here. Clifton added a comment in which I agree with. I think that the challenge, and I know, Ted, you'd probably echo this as well, right? That lenders for sure have had the kind of the challenge of navigating all of this, and the challenging rule changes from the SBA, and and the ERC for that matter as well. Understanding and navigating those changes, and so it's definitely been been in a situation that's kind of unenvious standpoint of having to navigate. But hopefully, like you said, I like the PPP fatigue. I think that's probably something that we're all feeling at this point in time. And
again, it may seem like I'm piling on the lenders, and I don't mean to do that, but if you familiar at all with the program and the fees that these lenders receive, for processing these loans, for God's sake, they will do that all day long for the fees that they ended up getting on these things. They were substantial, compared to what a normal commercial loan is, and especially as they're not the actual lender. They're backstopped on it. So yeah, I get it that, they may have on their books a 1% loan for longer than they would really care to have, but again, believe me, the fees made up for it. So, and there's a responsibility that goes with that. And so that's where I guess some of the frustration from my part and some of the borrowers' parts comes from.
Sure. Yeah, completely understand there, right? So, all right, well, Ted, we'll continue to monitor and keep track of things. We've got some podcast episodes going back talking about PPP and the rollout, and so it's kind of nice to chat on it again. But I guess now let's change gears a little bit here and go over to our top tax topics for today. And with that, we'll go back over to Yelena here, and I guess get the kind of latest on where things stand. Like you were mentioning, the Senate's back in. You're going to be watching. What's the latest? There's a lot of factors, things that have to happen. Continuing resolution, debt ceilings coming back into the conversation. Obviously, the Build Back Better. Where do things stand, and what do we need to know?
Yeah, so all the eyes are on the Senate, because the House has kind of done their part and they move things on to the Senate. The two big priorities, I think, including or in addition to the Build Back Better Act, is, if you remember back at the end of September, beginning of October, Congress passed a temporary stopgap measure to fund the government, to avoid a government shutdown. And they passed that through December 3rd, which is this week. So they're coming up on that deadline to fund the government again for fiscal year 2022. The thing is, Congress needs 218 votes in the House and 60 in the Senate to pass that for another year. And they likely don't have those 60 votes in the Senate, because the Republicans are kind of pushing back, saying, hey, Democrats, you've done this on your own. You can do this on your own too. And so likely what they're going to do instead is pass another stopgap measure. Usually they do a month or two at a time. So we're probably looking at a temporary extension of the government funding through January or February. It's against a temporary solution, but it's something Congress will have to address this week in order to avoid a government shutdown. Similarly, they had a early December deadline for the debt ceiling. So they also raised that temporarily through early to mid-December. We've heard rumors that Treasury is saying, hey, we actually have enough to pay our bills through maybe January, maybe even February. But we're going to hear more this week as Secretary Yellen speaks to Congress, both today and on Wednesday, regarding the COVID-19 pandemic and the debt ceiling. So we'll know more this week where that stands. But again, Republicans are not supporting a debt ceiling increase again. And so this is on the Democrats. And our predictions are that they're going to kind of connect together the BBA and the debt ceiling, because they'll need to use the reconciliation process and use the 50 votes versus 60 votes to get this passed. So those are kind of the two big deadlines coming up for the Congress in general, but mostly in the Senate, because that's where a lot of the unknown votes are. And so we're kind of watching that this week to see what they do there.
Yeah, it will be definitely interesting to see, and it plays a role, right? And even the Omicron, right, Tad, just to kind of how that layers in. There's just so many. It's almost like a storm of things kind of swirling around, almost, if you want to call it that. But now that eyes are back on the Senate, I know there's been some conversation maybe on the SALT cap, but that maybe any other areas, Yelena, that we might possibly see some changes on, or I guess maybe we're hearing some early rumblings on where those changes might be pointing.
Yeah, I think the SALT cap is a big one. It was a big one in the House because remember, you had a group of House Democrats that were saying that we're not going to vote on this bill if there isn't a SALT cap solution. And so it's a big thing in the House, and they finally agreed on an $80,000 increase through 2030. And then that went to the Senate, and the Senate has been very outspoken that they're going to change that. And the two biggest voices on that has been Senator Sanders and Menendez from New Jersey. They have been speaking out a lot about what they would like to change that to, and their solution is to do an income threshold phase out. So they want to do something they're calling a revenue neutral approach, which means the amount of added taxes raised from higher income families facing a permanent $10,000 cap would be equal to the tax cuts lower income families would get from a repeal of the cap. So you would kind of have two different groups and two different rules based on income. And previously, that threshold that they agreed to was 400,000, and that's what we were hearing. But now, according to new JCT estimates, that's probably more 550,000 to be revenue neutral. And so now there's some disagreement between the two senators, because Sanders is saying, well, hey, let's just stick to 400,000 and generate some revenue, pay for expanded Medicare. And then Mendez is saying, no, our agreement was revenue neutral. And just because that number changed doesn't mean we back out. And so I'm kind of curious to see where they end up on this, just because they were in agreement and now they're not. And those are the two loudest voices right now in the Senate. And again, you need every Democrat to vote yes on this to pass it in the Senate. And so even two Democrats disagreeing on an issue like this could cost the BBA in the Senate. And so they'll have to come to an agreement. I'm just curious to see where they end up. But that's the latest. As of yesterday, they had a press conference on that.
Yeah, definitely. Like you said, all eyes on the Senate and watching things here. So, all right. Well, maybe as we kind of wind down here, we'll move over to our top takeaways for the week. And I'm going to start with, I guess, a prediction. Again, as we always say, the crystal ball comment, right? So, Tab, we'll start with you. Based off everything we're just talking about, all eyes on the Senate, some of the factors that are kind of entering in here. What's your prediction on, I guess, whether or not we'll see that, the triple B going through, and if whether or not it happens before the end of the year? What do you think?
Yeah, I think last week I said, probably, a couple of days before Christmas, but, with the stuff going on now, with the Omicron and the like, I'm getting less, I don't know if I should be less optimistic, because I'm not too thrilled about, what they're talking about anyway. So, maybe I should be, I guess, more happy about things, but I don't think it's going to get done, for the end of the year, quite frankly, if it gets done at all. So I'm guessing, I'm getting a bit more pessimistic on it. So.
Yeah. Yeah, it definitely, like you said, a lot of headwinds, perhaps, in terms of if we want to think of it like a storm and winds kind of coming through. So, Yelena, where do you stand? Any changes to your predictions in the past?
No, I think I still agree with Tad in that, December, even end of December around the holidays is going to be a stretch. And, they might come to an agreement on certain provisions, but I think the holdup is going to be the timing. You have senators like Manchin speaking out very publicly saying, even if we come to an agreement, we should hold off and see, how inflation does, and just to make sure we're not overspending and we're not ruining the economy. And so a lot of that is maybe, again, one person or one Democratic senator can hold this up into the new year. And so as of now, it's more of timing, as we're calling it the perfect storm, as everyone kind of watches where things fall, and they don't want to step out too early. So I think that'll be the main consideration, is just the timing of this, even if there is an agreement.
Yeah, it's interesting. And I'll invite you, those that are in the audience, to check out our latest episode of the podcast. I mentioned Ed Carl earlier, and I think his prediction, which again, and that was even as we were learning about, just first hearing the word Omicron, so how that layers in. So I didn't get to ask him that. I don't know if that changes his viewpoint, but he was expressing that, maybe it's a couple days before Christmas, and maybe to get there, that the corporate rate might be something that they might look at in the Senate. But again, we're still talking predictions at this point in time. So we're going to be watching it very closely here. And that's why we're doing these. And so make sure you're subscribed to the YouTube channel, that you're checking back in with us. Again, we archive them if you haven't already figured that out. And we're always looking for your questions, your input, ways that we can help you. That's why we're doing this. That's why Tad and Yelena are here to answer your questions, because, certainly it's been a little bit quieter in terms of developments on the BBB, in terms of content, I guess. But there's lots of headlines that are kind of swirling around, and that's really what we're trying to do here. So before we wrap up for the day, Tad or Yelena, any kind of closing thoughts or things that you would leave everybody with?
I guess I would just say, just keep an eye out for, any kind of, indication of, and watch the names. Okay. Yelena's giving you them. You got Manchin, you got Sinema, there's, Senator Sanders, and Menendez right now, who's kind of a new one that's kind of coming in the mix. But, watch for any quotes from those people, because, Yelena's made the point from all sides that they got to have every Democrat, in the Senate, on board with this thing. So it seems like everybody is kind of, the Democratic senators are realizing they all have a little bit of power here, and they all may be throwing their hat into the ring about, something that they may be looking for. So keep an eye on that.
Great point. Yelena, anything you'd add to that, or leave everybody with, or we're still just your eyes are on the Senate?
Yep.
Okay. All right. Well, again, thank you for joining us here today. We hope you liked our conversation here. Again, let us know your feedback. And actually, I'll make this or throw this out there again. You can always send us an email at simplytax@bkd.com. Tad had mentioned, like last week, he had an analysis that he did a great analysis on those revenue procedures. Looking at the polling results here, it looks like, loan forgiveness and the treatment of it is something of interest. That's definitely addressed in that memo. So let us know if you'd like to copy that. Otherwise, we'll see you here back at the same time, same place, a week from now, to let you know what the latest is. So thanks again, and have a great day.